Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode 310. Today is the 22nd of November 2022. And the topic of discussion today is what is the probability of making a loss in Nifty 50 over a period of time. So we will calculate if you stayed in the market for 6 months, what is the probability of loss? If you stayed in the market for 1 year, 2 years, 3 years, 5 years, and you started at any point in the last 22 years, what would have been the outcome? So this is an important study because it gives you confidence that after this many number of months or this many number of years, the probability of being in loss in the Indian markets is extremely low. And that is because of the inherent growth strength of the market and the fact that even when excesses are built in the market, the earnings will catch up in a year or two, and then the growth in the market start again. So I'll show you all that data after the initial market wrap up. So markets again, PSU banks running up 1.7%, metals up 0.9%, IT stocks, IT sector up 0.8%, commodities up 0.6%, Nifty itself closing 0.5% up after 3 days of drubbing from the previous recent high. We're still very near all-time highs, and in fact, in the next six sessions, if we stay around these levels, we will close at a new all-time monthly highest close. So there's no reason to worry in terms of the level of where the market is. The only two sectors where we lost some money today was energy and real estate, minus 1.2% on real estate and 0.4% on energy. But the standout sector remains PSU banks, where in the last 3 months now, 42.3% gains have been made. In terms of broader indices, all indices were in the region of 0 to 0.5%. Excuse me. And small caps, in fact, losing very minorly at 0.09%. In terms of weekend investing, small case performances, you can see most strategies did 0.5% to 1.2%, MI20 doing 1.2%, and some strategies losing some ground, MI88, ATH2, and MI25 notably. Heatmap for the day: NTPC, JSW Steel, IndusInd Bank, HDFC Life. These were some of the stocks that did more than 1%. Titan, Infosys, cannot see much of losers except BPCL, a little bit here, Power Grid, Nestle, but a very sideways sort of a market, sort of indicating to me that this correction that had started from the top may be ending, and we may again, challenge the previous highs very soon. In the top gainers list, Easy Trip up 19%. So they did a huge bonus and a huge stock split. So while fundamentally it makes no difference to stock valuations, but a lot of folks like cheaper stocks, and this is a psychological advantage that some managements tend to use, and they got good benefit out of that, plus 19% on that. And of course, they have also announced some tie-ups with the northeastern states for promoting tourism, so which is a very good thing. Mazagaon Dock, ferocious stock which had gotten some beating yesterday, up 12% today. Cochin Shipyard, up 6%. Varun Beverages, very strong stock, up 4.7%. Bank of India, also very strong, plus 4%. Top losers, Paytm down 11%. And this is after their biggest investor sold off a chunk of their stocks, and the stock still is dropping. So maybe their timing on selling has been quite good. They've at least saved 11% as of now. But jokes apart, I mean, this is a falling knife. We don't know where the bottom is. I've said many times in the past that don't try to catch falling knives. At least have some basis that some pivot needs to be taken out, some 2 weeks high needs to be taken out before you buy, and then have a stop loss as well. You can't buy and just wait, endlessly. That can work in some cases, but more often than not, they'll give you sleepless nights, and I mean, from our perspective, that is not the correct way of investing. Swan Energy down 9%. Rail Vikas so far, which was very, very strong, has dipped a bit, minus 6%. Avanti Feeds minus 5%, and Electra Green minus 5% today. Today's topic is what is the probability of making a loss in Nifty, and we'll take 22 years of data and see over specific periods of time durations, what is the probability of making losses in Nifty. So Nifty from 1999 about 800 as a level went to about 1800 in 2000. Then it dropped back after the dot com crash down to 950 900 levels, went sideways for a couple of years. Then the 2003 bull rally started. 2004 BJP lost election and there was a sharp dip from about 2000 to about, I would say, 1200. So about a 25-30% drop here. And then the UPA came in and the market took off along with a lot of other emerging markets taking off. Global funds were chasing emerging markets. So we went from 1200 to 6400 in the next 4 years before the great financial crisis happened. And then the market dropped two-thirds. So Nifty dropped about 60-70% here, only to come back to the same level within a couple of years. And then it went into a sideways sort of move for the next 3-4 years before BJP came through, and then the market took off. Then demonetization happened, and then we went up again to about 12,800, and then COVID happened. We came down to 7,500, and then now to 18,000 odd. So this has been the journey in the last 22 years. At every point of time, it would have felt that Nifty is very expensive. Nifty can go down here. Emerging markets when they were flying. I mean, just imagine the kind of run up that was done after which this fall came, and then this recovery, and then a flat portion. So after every exuberance, after every stage where a lot of excesses get built, do you essentially get some deep corrections. And after this correction, a lot of excesses were taken out, and a new bull rally emerged here. So, what is the probability calculated here? So, we've taken last 22 years of data since January 2000 and taken 6 months of rolling return. So, from any day till the next 6 months, what is the probability that you made a loss in Nifty? So, which was 34.6%. So you blindly chose any point and you invested, you still had a chance of 65% of making a profit. If you chose any day and invested in Nifty for 1 year, you had a chance of nearly 74% of making a profit. If you chose any day and held for 2 years, it could have been January 2000 to January 2002, it could have been May 2014 to May 2016. If you held for 2 years, you had almost a 80% chance of winning. If you held for 3 years, you had a 93% chance of winning. If you held for 4 years, any period during this 22 years, you had a 97.5% chance of winning. And over 5 year period, that became 99% success rate. Over 6 years, 99.7%. And there was no period in the last 22 years where if you held Nifty for 7 years, you made a loss. So this is very, very powerful probability that we are already sitting more than 1 year from the previous peak. So the probability of making a loss is already coming down dramatically. We are already somewhere near 25% probability of making a loss from where we are based on this data. Now, past data may or may not work in the future, but 22 years of data is not meaningless as well. So the idea is that you must plan your investment in such a way that you have a runway of at least 3 to 5 to 7 years of period, over which period, most likely than not, you will come close to the average CAGR that the instrument is providing. You may have some bad years, you may be starting from a bad year. We've also shown in our live long-term shift strategy, even if you start from the very top in the market, that strategy is still sitting on some XIRR of 24% in 13 months, something like that, 27%. So don't be afraid to start. And if you've started, keep investing, because we are fortunate that we are sitting in a growth market. The underlying is actually moving up. The underlying is moving up, and we are just moving up and down around that average that is moving up. So we may be in some excesses at some point and some deficiency at some point, but the arc of the actual market is actually going up, because it's a net growth market for the next many years to come. Definitely a decade or more to come. So that was that, and I also wanted to show you some insights on some charts. So this is a chart of dollar gold, and I wanted to highlight this because a lot of people who are learning charts can take some lessons out of this. That after this peak in March 2021, sorry, March 2022, at around 2070 odd, golds in dollar terms started to fall. It made a low here, it made a lower high here. So this was the high of this entire previous trend. Made a lower high, made a lower low, lower high, lower low, lower high, lower low, lower high, and then it made a sort of a double bottom here. It went up and made a triple bottom here, and then it started to come back up. So this, the last lower high, that is the important pivot in any such chart. And these are high probability points. There is no guarantee or certainty about anything. But these are high probability points that once this pivot gets taken out, you may see a stronger move up. So this was the breakout point above the previous low high. It went to a higher high than here, and then it has come back and it has retested this breakout point, and so far it is at 1747 trying to go up. Now if it fails and drops below this breakout point, then of course this entire setup has gone waste. But if it does come back up here and takes out this higher high, you would have a higher high and higher low, and that taking out would be a confirmation that the trend is up, and you would, I think, very quickly go to at least this high, and once that is taken out, you may achieve this high also very quickly. So this is something that we will track and see where this goes, and this is on a daily chart on dollar gold. So this was something for people who track charts. Also, another insight on, as I said, on the Nifty itself, we are very close to a all-time monthly high close, which also happened last month, but we are closing even higher this month. So I see no reason of any heightened worry on the Nifty as yet. Maybe if we take out this 16,800 low here of the last 2 months, that's where some weakness may start to arise if we go there. But so far it doesn't seem like we're going there. Oil is another chart that you would want to see. Oil, which peaked in March 22, again, has been oscillating down, and then here after a very sharp move yesterday, it recoiled back up and made this sort of a hammer-like candlestick, and it has started to go up after that. So if on a daily basis, if we close higher than the top of this candle, there can be a good probability that we will start a new leg up on oil, and the jury is still out there. This is the zoomed in version of that candle. So usually tops and bottoms, they are violent, and this is quite a violent candle from that perspective. I also wanted to showcase uh, one of our products, which is MI35. It has been doing extremely well. It has gotten hidden in the vast majority of products that we have there. So this focus is there today. It's a small cap product. It invests in 35 small cap stocks, allocating small portions to each. So less than 3% is allocated to each stock. And in the last 3 months, it has clocked almost 12% gains versus 2.3% on the small cap index. Extremely robust gains here. Also, since we went live in July 2021, so almost I would say 15, 16 months, it has clocked 21.2% versus 4.2 on the small cap index. Again, a very good performance. Although it had reached very, very high in January this year, but small cap index also has dropped from plus 16 to plus 4 only since then. And if I include the back tests since from before we started in July, so we started live from here. But if I include the back test since 2016, then it has outperformed the small cap index by a wide margin at 430% versus 133% on the index. So it's an extremely robust product. It is very, very well diversified. It can give fantastic diversification to your portfolio if you are not allocated at all towards small caps. Small caps give you that additional alpha in your portfolio, and when mixed well with other parts of large caps or maybe index investing, etc., it will give you that kicker, that alpha in your overall portfolio very well. So, just a summary here: it's a weekly rebalanced strategy. It's a rotational momentum strategy, so you'll always remain invested, never go to cash, but you will always rotate to the strongest stocks in the small cap 250 universe, which is already a pre-selected best small cap universe, and we'll have 35 stocks from there. This was a focus on MI35. Please go check it out at weekendinvesting.smallcase.com. And thank you so much for your time. And I hope you are sharing this video with your friends and family. If you have not done so far, it is my request that at least share it with one person who you think can make use of this, and that will be a big help to me. Thank you. Bye.